Rushing to withdraw their cash, shocked Cypriots are told they'll have to help foot the bill for a $13 billion bailout. Wealthy Russians are also being targeted over long-held suspicions of money laundering and tax evasion. This is Inside Story. Hello, welcome to the programme. I'm Jane Dutton. A painful decision made to obtain financial aid and prevent the island nation of Cyprus from going bankrupt just 3 weeks into the job. And Cypriot President Nikos Anastasiades is tackling the nation's debt crisis head-on. Anastasiades says he had no choice but to force savers to forfeit up to 10% of their deposits to avoid a catastrophic banking collapse. Cypriots themselves are furious, and they've responded by trying to clear out their accounts. Here's why. People with savings of less than $130,000 will pay a one-off tax of 6.75%. Those with anything more in their accounts will forfeit 9.9% of their savings. The levies would generate $7.5 billion, with depositors being compensated with the equivalent amount of bank shares. Cyprus is also facing pressure from the EU to tighten the regulation of its financial system, under particular scrutiny as the flow of billions of dollars to and from Russia. Germany has been trying for months to clamp down on alleged money laundering. More than $32 billion of deposits in Cypriot banks are said to be controlled by Cyprus-based Russian companies. That accounts for a third of total Cypriot banking deposits. In 2011, Cyprus attracted almost $120 billion of Russian investment. And that same year, almost $130 billion flowed back to Russia. That's 5 times more than the island's annual output, little of which is invested in Cypriot economy. Let's get straight to our guests. Joining us from the Cypriot capital, Nicosia is economist and political analyst Fiona Mullen. We can also speak to Demetris Georgiades, financial editor for the Politis newspaper in the capital. And completing the panel in our London studio is Bernard Casey from the Hellenic Observatory at the London School of Economics. Bernard has carried out a number of research projects for the Cyprus government. Thank you, all three of you, for joining us. Demetris, what a day for Cyprus, eh? People, what are they saying about this raid on their own bank accounts, their precious savings?
Okay, it was something obviously unexpected, but we have to bear in mind that a series of unfortunate events took place. They are a thing of the past. There is a cost attached to them, and someone has to pay for them. There is no way to avoid the cost. There is no painless solution.
Fiona, I know that you were one of the victims. I believe that you had your account closed. You couldn't draw any money. How did that make you feel, and how did it make you feel to get involved in another country's economic crisis like that?
Well, yes. I've been here over 10 years now, so people
like
say I'm an honorary Cypriot anyway. I certainly do after this weekend's events. But I think what Demetris says is right. Yes, I think what Demetris says is right. It's it's either this or the abyss. It's pretty painful, and I think it's a shame that they've hit the poorest as well as the wealthiest. But the alternative really is much worse, and so we have to be sanguine about it. And I think maybe after the initial shock of yesterday, that's becoming the feeling now, which is why I think Parliament probably will pass this tomorrow.
Okay, we'll talk about that a little bit more. But Bernard, I firstly want to get your response from British investors, because they'll bear a large part of this.
Well, first of all, I want to say that it was not unexpected. We have seen that this has been entertained for weeks at least, and probably longer. Just to pick up on something about the banks failing, the story which Fiona tells me reminds me of when I was in Russia in 1998, when the ruble fell and I saw the exchange rate changing by the minute, and this ended up with the bank automats closing down as well. So I've seen this. I've also seen the picture of somebody using a bulldozer to try and get money out of a bank. But it was expected. What is interesting is that the president was in denial right up to the last moment. He said that this was the thing he was not going to tolerate, and nevertheless it came through. He was given a poisoned chalice by his predecessor, and he was very reluctant, and now is having to apologise for sipping from that.
Yeah, Demetris, I mean, your poor president, he hasn't been long in the job. Bit rough on him, bit of a hard start to the job.
Yeah, I mean, it's quite hard, but we have to bear in mind that there was no way our president or anybody else could have come out and said we are having a bail-in on depositors within 5 days. I mean, the whole system would have collapsed. It was a difficult decision. It was made under a lot of pressure. As I said, there is a cost attached to this crisis. We have to pay it. We all decided to spread this cost 2/3 over the next generation and 1/3 on our generation. And it's fair, I think. Everybody has to pay. Whether this will upset the markets, I hope that the ECB and the IMF planned this correctly, and they have the measures in place to calm down the markets, both locally and internationally.
Cyprus is the third smallest economy in the Eurozone, behind Estonia and Malta, with a population of just over 1 million people. Gross domestic product, the value of all goods and services, was worth over $24 billion in 2011. Now, this proposed bailout is more than half that figure. Cyprus has also been asked to shrink its bloated banking sector. It's currently said to be worth 7 times GDP. Overall, Cyprus accounts for just 0.2% of Eurozone output, but finance ministers are keen that no Eurozone state should default for fear of compromising the credibility and integrity of the single currency. Fiona, it seems that everybody's in agreement that something had to be done. But is this the right way to do it? Is it because Cyprus is so small that it's a country that's relatively easy to bully? Because this hasn't been done this way before.
Yeah, I think although Bernard said that this has been on the table for a few weeks, what was absolutely not on the table was that people with what they thought were insured deposits would lose some of them. So that's the really big shock here, was everybody thought at least the ones with the uninsured level over 100,000 and above could be hit, even though that was considered to be pretty risky for the rest of the Eurozone. But the thing that was very unexpected was that even the widow with only 10 euros in the bank will be hit by this. So
yeah, I mean, you were saying earlier on that the rich are exempt. Why is that? The very rich?
Well, they're not exempt, but they were protected to a certain extent. There was a choice between only hit the rich and hit the rich and the poor, and thereby hit the rich less. And they took the second decision, I think, to try and savour the financial centre, basically. But why did they choose this for Cyprus? It is partly an issue of being small. I think, we found out really this week that when you are a small Eurozone member, you're not really an equal member. But there are other issues to do with the kind of debt. The banks don't actually have a lot of debt, so you couldn't go and cut that. The government doesn't have an awful lot of debt that's cuttable, and that which is cuttable is legally tricky because of the nature of the law. It was done under English law, and so on and so forth. So you wouldn't have found 10 billion by cutting sovereign debt, nor by cutting bank debt. So they had to find the money from somewhere else, and they looked at the big deposit base, and that's where they got it.
Bernard, what about going after non-EU depositors, though?
Well, I mean, yes. I mean, Fiona's right that half of government debt was actually owned by domestic banks and related institutions. So if you'd have done a haircut of the sort that was done in Greece, you'd have actually exacerbated the problem of the banks. That was very clear.
And so it's interesting that Greek depositors in Cypriot banks are being left alone.
That depends on how the Greek banks, the Greek depositors are treated. But I'm not aware of the details of this. What I find, I'm aware that, for instance, British service people who have euro bank accounts in Cyprus because they've taken some of their pay might get it. I don't know what the resolution of that is, and there might be protected groups. But I think what is important is to see the way in which outside pressures have been put upon Greece to take this particular path as well. Germany, I want to mention, because it was some months ago that the German security services, the secret security services, were raising questions about the nature of the money that was held in the Greek banks, which Germany, as a Eurozone member, might be responsible for bailing out. And the suggestion came that a lot of this money was in some way or another dirty. And this raised enormous problems inside Germany about what Germany was prepared to tolerate. So yes, there is a case of big countries, and certain big countries in particular, dictating what was happening. Those big countries have dictated what is happening in all the other rescues as well. I think that what Germany and what the other countries have not taken full account of, possibly, is the contagious effect of this. I think that if I was holding Italian or Spanish government debt, I might be very worried indeed, because I see what happens in Cyprus as not a relative irrelevance about a very small country. I see it as actually a domino which, if it falls, could cause other dominoes to fall. If I were a Spanish bank depositor, or if I was an Italian bank depositor, I might be very worried indeed that a precedent has been set.
I know, but that certainly is a big concern. Excuse me, jumping in here. Cyprus is the 5th country to turn to the Eurozone for financial help, but it is small compared with previous deals. Greece has had 2 bailouts totaling almost $500 billion. Ireland's rescue deal was worth $111 billion. Portugal has been bailed out to the tune of $102 billion. And Spanish banks have been given $54 billion. Fiona, let's pick up on what Bernard said there. There is a real concern that this could lead to some sort of contagion. Why wouldn't investors elsewhere in Europe think that the same is going to happen in their country?
I think, interestingly enough, it's the investors who've been protected here. So anybody who lent money to the Cyprus government is still, assuming the Parliament passes it tomorrow, will still get their money back on June the 3rd is the closest Eurobond payment. So what the contagion here is the bank depositors, is the ordinary people on the street who the legislation was passed, I think, last year, saying, don't worry, Eurozone deposits are insured up to 100,000, and that turned out not to be true. So I think it's the depositors who are going to be, it's a blow to the credibility, the trust of people in their domestic banking systems, and I think it will create some panic there.
Demetris, that's certainly true, isn't it? A lot of Cypriots are going to wake up on Tuesday and they're going to go to their bank if the doors open, because of course it's a holiday until then, and they're going to see that the bank that they trust has dipped their hands in and taken out their cash.
I'm sure that the central bank, the commercial banks, and the ECB have already planned for this event. I don't think there would be a run on the bank, and I'll explain why. Because everybody knows that the ECB is here to provide effectively unlimited liquidity.
Yeah, they'll show up the banks if there is a run, won't they?
Okay, and there are other arguments as well. At the moment, Cyprus offers one of the best interest rates returns on depositors. So if you know that you have the guarantee of the IMF and the ECB, you will move funds out of Cyprus just for sentimental reason. Cold logic tells you to leave the money here and even bring them back, because for the last year, it's I think 5 to 10% of the deposits have flown out of Cyprus.
And, but isn't Malta all of a sudden looking a little bit more attractive?
Yeah, I mean, it is more attractive. I mean, depositors in Cyprus have been earning 2 to 3 percentage points above the average Eurozone interest rate. This was an insurance premium for the increased risk they took. The risk materialized. This additional 3% over 3 years is the 10% they're going to suffer now. And if I can go back on the discussion, I mean, there is a big difference. There is a big difference between Greece and Cyprus. Greece had a huge public debt. That's why they found a solution on cutting down on a haircut on government bonds. In Cyprus, the big problem, the main problem, is the huge banking system. So the obvious solution for the IMF and the Germans from the beginning, it was how to reduce in an effective way the banking system. This is a way of doing it. If it proves right or wrong, I mean, we'll find out on Tuesday.
Okay, Bernard, let's pick up on something that you touched on about the anger of dirty money. You were talking about Greece, but there's dirty money too in Cyprus. And a lot of people feel that it's the Russians, or the Russians are certainly involved in that. Do you think this is a way of clamping down on that?
Well, the question there is what is going to be the role that Russia will play in this bail-out and bail-in. I understand that the finance ministry is due to be visiting Moscow shortly. There is the 2.5 billion loan from 2011, which is due to be paid back in 2016.
Well, they insist on that.
Was supposedly given. Yes, and the interest on that. Can that loan be rolled over another 5 years? That is something which is being discussed. So whilst the loan was given without conditions at the time, one is never quite sure what is meant by without conditions. Russia has no doubt an interest, and powerful political forces in Russia must have an interest in having a niche like Cyprus through which transactions can go. It is interesting and amazing that Russian money flows in and out of Cyprus are in the tune of something like 5 times GDP.
Extraordinary.
Banks are 8.5 times GDP, but it's an enormous sum of money. The next biggest flow comes from places like the Cayman Islands and places like Guernsey or Jersey, the Channel Islands. So one wonders exactly what this money is. How clean is it? What is it doing? And this is something which has been going on in Cyprus for more or less since the collapse of the Soviet Union. It started with Russian shipping lines suddenly registering their ships there. And
they've got such a long history. Let me bring Demetris in here. I mean, what sort of impact has Russian money flowing in and leaving very quickly on the economy? Does it benefit those there, Cypriots?
I mean, the main benefit from the funds you just mentioned is effectively the transaction costs, the transaction charges that the banks impose on these funds. In addition, they create jobs here, I mean, that facilitate these transactions. Usually they have offices here that they receive accounting, audit and legal advice, which again, they generate highly well-paid jobs. I mean, it's good for the economy. Whether it's dirty money or it's money that comes through Cyprus because of our attractive tax system and low corporation rates, or because they feel secure with Cyprus, or because they receive highly professional services. I mean, it's something that the Troika investigation will examine and reach a conclusion.
Yes, and again, because corporate tax is going up as part of this deal. It's not going to help them, is it?
Sorry?
Corporate tax is going up as part of this deal.
Yeah, corporate tax is going up to 12.5%, which is still one of the lowest corporate tax rates in the Eurozone, in the whole of the EU. So it's still attractive. But what business people are looking for is a stable environment. And we all hope that this new deal, if implemented, will create a more stable environment.
Now, Germany has been leading calls for investors to contribute to the bailout, and we did touch on that a little earlier on, calling it a fair distribution of the bailout burden.
Tatsache, dass die The fact that Europe is capable of making these decisions in an orderly manner will strengthen trust in us, and people recognise that those who take risks will be liable for them. Profit expectations and risk have to coincide again.
But ordinary Cypriots see no trust, nothing fair in the terms of the bailout.
It is the worst thing that could ever have happened to the Cypriot depositors. We do not know how the situation will evolve. We will have to see.
The situation is unacceptable. They have deceived the people in saying that they would not seize their savings.
Why should they take our money? I do not understand this. We work and we deposit money for our own purposes, and they come in to take our money? This is unfair. Unfair.
We are protesting against the deceit we faced as far as the deposits are concerned. They are saying that they were safe. Now we have to see what we can do.
Fiona, everybody there basically saying how unfair it is. And as you mentioned a little earlier on, it's the widow who's getting hit by this. Is the right person being targeted here? Shouldn't it be the banks? Shouldn't it be the bankers?
Well, yes, there are certain bankers here who are trying to claim large bonuses, and they were the people who took the decision that got the banks into trouble in the first place. But I think the real shame here is that they didn't even put a limit, let's say €200, just to protect the very poorest, because there are people here living without electricity. You know, the number of people having to go and get special help from charities and so on has been increasing because we've been in recession for well over a year now, and unemployment has risen pretty fast. So
that's going to make people pretty angry, isn't it? I know they're angry, but I mean, what's going to abate this anger? I'm not sure.
Mm-hmm. But I think, just going back to something that Edward was saying before, you know, that there was a regime where it was very lax, but Cyprus was obliged to clean up that regime in order to join the EU in the first place. It couldn't have joined without that. So you sort of got a situation where I like to have a metaphor of you walk into your own home and there's a burglar standing there, but he's wearing an official uniform and he entered with a key issued, a proper key to your house issued to him by somebody else. Who's the guilty person, you or the burglar? And in a way, I think Cyprus has been caught by this. It's been blamed for being the burglar, when in fact it's the people. By the time the money gets here, it's already clean. So it's very difficult to trace. You know, the EU needs to have a proper anti-money laundering unit itself. It doesn't. It's split between the OECD and the Council of Europe. And it's a very big problem in Europe. It's not just in Cyprus. You know, there's very big banks in Britain have recently been caught by this. So I think it's been a little bit unfair to focus on Cyprus, but it's also to do with old Cold War hostility against Russians.
And Demetris, just to end on you, I mean, do you think that it's all going to go ahead? Parliament's going to give the nod?
I think the no vote is a non-option. I mean, whatever has been decided, it has been decided. People are talking about the moral hazard, that if it goes ahead, all depositors all over Europe are going to withdraw their money. From the moment that the ECB and IMF already took that decision, the moral hazard is there. Irrespective of what Cyprus will vote tomorrow, the moral hazard will, I repeat, it will be here. What you have to decide is which is the best option. The best option is a yes vote. Otherwise, we'll risk to lose the support of the ECB, and then we'll definitely have a run on the banks, and it will a disaster for us.
Okay, now we are, as you can imagine, getting strong reaction on Facebook, nearly all of it sympathising with ordinary Cypriot savers, and we could hear a little bit earlier on how angry they all are with the banks. Alexa Correa asks, why? I mean, did the small private savers play monopoly with their money? No. So make the bankers pay, not the common man. Huda Gama says, why on earth should the people who work so hard in their lives to save a few pennies pay the price for poor decision-making by the banks they entrusted with what little they had? And Fiona made a point there that at least they should have put some kind of limit to it so that the poorest of the poor are not affected. Richard Poole says, it's outrageous. The bankers who caused the crisis have still not been prosecuted, but the honest citizen is being forced to pay. Give me a break. And Alexi Zilber adds, the banks should pay. That's a a feeling that's shared all around the EU, but you can thank the government there for bending over for the IMF to screw the people over. Strong words there. Thank you very much to my guests, Fiona Mullen, Demetris Georgiades and Bernard Casey. Thank you as well for joining us. A reminder that you can add your voice to the discussion by going online. You can go to our Facebook page. That's at facebook.com/AJ Inside Story. And you can find this program and many more on our website, aljazeera.com. Look for Inside Story under the programs banner. Thanks for watching.